Happy June, everybody. Hopefully you guys are staying cool, enjoying the warm weather, and wanted to just come to you with a quick market update. I'm sure you guys have been seeing real estate in the news a lot, so let's jump right in. I would say the biggest story of the year so far in real estate has definitely been the interest rates. 30-year fixed rates have gone really from about 3.25% at the beginning of the year to up over 6%. On an average across the country. Now, some of our local lending partners here are still below 6%, but I know yesterday was another rough day with the Fed announcement happening today, though we could see those rise even more. One thing I wanted to talk about today that's a little bit different from normal is what typically happens in a recession in terms of real estate prices. I feel like the biggest question that people have been asking me, and I've been seeing printed in the news media, is that major changes are coming, the bubble is bursting, all of the crazy clickbait headlines that you hear. But I wanted to talk about a little bit of reality and specifically to Central Ohio. So what I wanted to do was show you this chart of the average appreciation or change in average sales price of all properties across Central Ohio, all dating all the way back to 1955. So you can see, and again, these are all properties, so this includes commercial properties and other types of properties, but it still gives us a good idea of what was happening in the residential market. You can see obviously the larger appreciation numbers that happened here over the last couple years. And then you can go back to 2011, which was the last year we had depreciation. And then ironically enough, most people wouldn't realize this, but in 2009 and 10, prices actually went up a little bit. But we saw a huge drop in 2008 and a small drop in 2007. And then you can see kind of the writing that was on the wall in 2006 with a 1.87% appreciation. But if you look back, the years leading up to that, we're not appreciating at a massive clip. And so I want you to keep that in mind, that there's just a lot of fundamentals that are not in play now that were in play in 2008. And if we keep going back, you see that from 1970 to 1990, still no other years where we saw depreciation. And actually during the high inflation years of 1978, 79, and 80, you can see what happened to real estate prices. They actually were some of the largest increases that we've ever seen. And so if we kind of overlay what we expect to happen in the real estate market, even though the number of sales may have fallen back a little bit, which actually also was not true in Columbus, Ohio, but the price appreciation was, starting in 77, 7%, 11%, 10%, 10%, and 9%. And then once inflation got into check, which is the exact opposite of what people are saying in the news media, you actually saw the appreciation or the inflation of prices actually slow down to some of the lowest in terms of appreciation. So exactly what is, in my opinion, the opposite of what's being talked about. So the last time prior to 2007 that we saw prices fall in Central Ohio was actually 1958. So I say all of that to say that we average a recession every 7 years. And you can also see during the recession of the late 70s and early 80s, during a similar time of massive inflation, that prices actually increased at some of the highest clips that we've ever seen in Central Ohio. So hopefully, as you're listening to these national reports and realizing that not only is real estate local, but it's also relative. And so a slowdown in appreciation potentially, or a fallback in the number of homes sold, definitely doesn't equal depreciation. If we jump over here to just annual residential home sales, which we didn't really start tracking in Central Ohio until 1995, One thing I wanted to point out was one of the main drivers that caused what happened in 2008 to happen was actually an oversupply of homes for sale versus the number of buyers. And so I wanted to show you what actually happened here with regards to the number of new listings on the market. So starting in 2004, from 2004 to 2008, there were over 40,000 new listings. And actually in 2005 and 6, there were 50 and 51,000 respectively, and then 49,000 in 2007. If we come up here and look at what the last years have been, we've only been adding, it looked basically on average about 36 to 37,000 listings. Now, I don't know about you, but I know for a fact that Columbus is rising in population. So literally, we are putting about 30% fewer homes on the market, and we have a larger population. So we have a major supply issue. The other thing I want to point out here is when we look at average sales price. So remember when we looked at the previous slide, and we talked about the fact that there was a year, I think, on there where all properties depreciated by 15%. If you look at that same year in 2008, we see that the residential home prices actually only dropped by 5%. So we actually only saw a combined adjustment in prices of about 11 to 13%, and a lot of that was very geographic based. There were some areas within Central Ohio that saw more than that, but there were several that also saw less than that. So I say all of this to say that we have a major supply issue that's been brewing for several years, and this is one of the major factors that's just not at play now that was at play then. So quickly, updated housing numbers here. You can see that this June versus last June, at least the first few days, we do have about 10% more listings. Now keep in mind, this changes kind of by the day of the week, so you always have to take that with a grain of salt. But we also see that year-to-date numbers, which also match that, are the 9.7. The number of new listings year-to-date are only up 0.4% compared to last year. The number of sold properties, and my face is actually over it here on this slide, but the number of sold properties were down a little bit, I think about 4%, and that was likely just due to the lower inventory early in the year. But the pendings, which you also see here in the monthly data, are still up. So long story short is there's still a lot of great stuff happening in the local market. I don't predict that there's going to be a huge fallback in prices. I don't predict there's going to be a huge fallback in demand, and we would have to have a massive slowdown in terms of the number of buyers out there before, and then a massive increase in the number of listings before we saw a major change, anything other than just going back to what would be considered a normal housing market here in Central Ohio. So thanks so much for listening. Hopefully this information was helpful for you, and have a great day.